Just going over this. Okay, cool. So these rectangle boxes that you guys see, as you guys know, we kind of draw like the little rectangle boxes showing like our highs and our lows. That's how we kind of determine those. But what I did was all I did was basically just drag it out so you can see it as an entire zone, so you can see how the market kind of plays within those areas. So here, right here in this area, it's dragged out because this was a lower high here, and then of course, well, let me just go here. So this is a high here, low here, lower high here, lower low here, lower high here. So me having this zone is because of this lower high, and then me having this zone right here is because of this lower low. So you can kind of see why market is reacting off of those areas. But overall, right, we don't just focus on the little things of how the market is moving. Our overall movement was from this high, this low, this high, this low, this high, this low. Now, I know you guys remember how I talk about internal highs and internal lows. This is the external, this is the actual move ultimately from here to here, right? That is the overall move. If I was to draw the fib from this high to this low, you guys will kind of see where that retracement kind of happens. But let's let's go ahead and just gonna drop the fib there for y'all. So y'all can kind of see right here is where our 61.8 at. Market came and went up a little bit and then eventually started to come back down. Now, based off of just that itself, let's delete that because that's not needed at the moment. But I want you guys to just pay attention to how I marked out these zones. So looking at this, we know that, of course, lower high, lower high, lower high, lower high. All of these is pretty much, and this is what we talked about last week. Um, Basically, I think we probably ended up selling right here, and then gold starts shooting up, right? And the reason why is because now market has hit a key level or key zone, which was right here. Market started to retrace after hitting the zone. As you can see, when it hit here, it went up. When it hit here, it went up. When it hit here again, it went up, right? And that's probably why if you were selling the sellings, you would have been getting out at this low, basically, because we see every time market comes to the zone, it shoots up. So based off of this, when market retraced and came all the way up here, right? Some of us might have thought market was probably going to continue to buy or probably go up. I'm not gonna lie. At one point, it kind of started to confuse me on what it really wanted to do because I'm thinking, oh snap, we just broke all of these lower highs. So maybe now market wants to reverse and start going back up. But when I kind of zoomed out of the market to see exactly what was going on, I realized that okay, this was the true high, this was a low, this was a lower high, this was a low, this was a lower high, and this was a low. I said, okay, cool. From here, right? Because if we were going to continue going up, guys, if we were going to continue going up, we would have never broke back below this trend line. We would have continued to go above this trend line and continue trickling up. As you guys can see here, if we were going to continue going down, we would have never broke above. We would have kept going downward. So in this case, when market started doing this and started breaking below here, guys, once I seen this kind of happen, I'm like, okay, now if you didn't catch this move, right, that's fine. Because I mean, who would have known to just easily get up, easily get in the trade from there? Unless you were scaling going to the higher time frames. Like this is the reason why you want to always focus on higher time frames, whereas the lower time frames, because the lower time frames are for entries, not for you to be trading on. And that's why I say even like intraday trading and stuff, like you still want to go into higher time frames if you're looking to intraday trade because you need to actually know where you're at in the market. Looking to get at the 1 hour and 15 minute five is cool and all, but that can confuse you a lot, right? So that's why I'm starting to, I'm not even gonna say I'm starting to lean more with me on swing trading. I'm definitely agreeing that swing trading is a lot better because it's easier for the eyes and easier for you to not so get faked out by all these small little moves that are happening right here and making you think, oh, it's time to continue to sell here after we done hit a area that kind of stopped us from selling previously multiple times. So just based off of this here, right? As you can see, the downtrend is happening, right? As market, let's say we took this sale, we lost the sale because market decided to come back up. Guess what? That's okay. That's cool. we don't look for any more sales until we can determine that this trend is no longer going up. And now when this happened, market came here and rejected this zone. Remember, this is a lower high. So what I mean by that, guys, is I always look to the left when I'm looking to get an entry in the market. If I see that the market came to this zone and I have this lower high here, my thought process is more so of if we break above here and we test this area and hold at this area, we're going to continue going up. But if we break below here, then all that was just a sweep of this previous lower high, and then we can continue looking at potential sales from this area, right? And this is why it's so important to use that retracement trend line because then you will know when it's time to actually enter a trade. If you don't use the retracement trend line, you'll be getting in prematurely. And then you'll be catching yourself either getting caught in liquidity or you'll be catching yourself getting into really bad entries. So let's say if you did not catch this, that's perfectly fine. Because if you did like just because even if you didn't catch this, that's fine because you have no confirmation to tell you that market is going to continue going down unless you just go to lower time frames and you can kind of see how when we broke back below. But none of that really mattered to me. You know what I'm saying? After I draw this retracement trend line again. After I seen this, right? What happened to this upward trend line or the retracement trend line, guys? What did market do from there? What did market do to this trend line right here?
Break of structure.
It broke it, right? It broke the trend line. So that lets me know that, okay, now the sellers are in control. I just need to figure out where can I get an entry at? All right. So here, right, after we determine high, low, I'm looking right here now. I know for a fact, sorry guys, excuse me, but let me remove this field. I know for a fact from here, right, from this high, hold on, let's take this off. Because like I said, I was starting to think that this thing was actually going to buy, but then when I seen this, I said, okay, it's actually not potentially looking for a buy. It's just giving us a nice pullback for us to get another entry. So I look at all factors of the market because I want to see what are you really trying to do, right? So from here, I understand that this is now a technically still a lower high because we still respected this here. So I placed the fib from this area, which I know gold probably still continue to trickle down all the way down here, guys. Again, even busting through here would be nice. But let me not get ahead of myself. So either way, from here, right, we got a new high or pretty much a high and then a low. So what I'm looking for now is something in this area, right? So let's take all this stuff off because I know it can get a little confusing with so much on the chart. So let's start taking some stuff off because that move already kind of happened and yeah, it's a little too late for that now. But let's remove this too. I want to clear this chart up as much as I can because I don't want to confuse y'all. And if I'm confusing you right now, it's okay. I will make sure it makes sense soon, but just bear with me for now. Hold on, I'm trying to remove this. Trying to take stuff off the chart. Okay, I can remove this too because we all know and see that market has broken that retracement trend line. I'm just trying to give you guys like a better visual. Let me take this off too. Let me just clean this all the way up for y'all. All right, remember that zone market kind of went above it a little bit and came right back down. Just let us know that that's a strong resistance, so I can keep this here. All right, so now I have my fib from this high to this low. Okay, because we broke this retracement trend that I had drawn up here. We broke that retracement trend. All right, so from there, guys, this is kind of where it gets really like I'll say more complicated and hard when it comes to trading. But it's up to you to make it easy and simple for yourself. So we all know, right? Once we place this fib, what are our areas of interest? Like, what are the areas that we're looking to actually get into the trade? The Fibonacci tells us exactly what we're looking for.
So
61
that's
point and 50.
yeah, 61.8.
61.8 and the 50%. That's it. That's all, right? So once, guys, we got like this system. I'm not gonna cap. The system is literally straightforward and it makes so much sense, right? It's only us that will make it difficult, right? If we don't follow it, right? So
So,
simple. Oh, go
so
ahead with your
can we
question.
look at other confluence like was it a previous uh resistance area or the supplier demand area, as a additional confluence to enter the trade in that area?
Okay. Okay. So basically, in your in with your question, yes, that is let me make sure I get it right. Supply area, right? It's a huge supply area right here. And if I extend this out, you can kind of see what I mean by that is because you remember when market kind of gapped right here, we needed market to come in pretty much clear this gap up, which it kind of did here, and then eventually came and took out people because it made sense for everybody to sell here, right? So it went ahead and took out this lower high. And this is what I mean, guys. You want to see market take out previous structure. So right here, we took out this lower high, we took out this lower high. And the reason why market kept going up is because it had areas right here that it wanted to come and retrace into. Basically, this bearish order block. Honestly, this one right here, right? But if I go to lower time frames, you can kind of see that that was also some type of fair value gap, most likely. But in this instance, all market wanted to do was find liquidity. And basically it found liquidity by taking out these lower highs right here. This was the true lower high up in this area. These right here were all internal. So external highs, internal highs inside of the actual move. Remember, this move from here to here is the external move. Anything inside of this is internal. So you can expect market, and I'll say gold to be exact. I'm not gonna say market because sometimes everything doesn't move like gold. Gold literally looks to sweep liquidity. That's gold. That's how gold moves. It moves based off of taking out liquidity. A lot of pairs move that way too, but gold specifically does that. It literally does that. It's plenty of times where market can literally take us out of a trade and then go in our direction. It's only looking to target liquidity. So these internal lower highs is what market did, came and took these out. And from here, guys, like you're not going to know everything. You just got to go with what makes sense. From here, we can easily see that this right here, kind of like a pullback, but this is also like a low on a lower time frame, a higher low on a lower time frame. All right. So from there, what we see is market like we already stated, we broke the little retracement uptrend we were creating, and then we dropped below. Now, this is what's very important, and I want you guys to really like understand this part. When it comes to even getting into the trade, we know that we're looking to enter at the 50 or the 61.8. We know this, right? We already know this. So let me fix this. Put that back like I had it because I had it there for a reason. Now, at this 50 and the 61.8% that you guys see right here, let me check the chat, see if anybody said anything. Perfect. Yes, yes, yes. If y'all can drop that in the Telegram groups, whether in the beginners and the advanced, Ahmed, that'd be perfect, bro. Thank you so much. Please drop that document in there for everybody. All right, so right here, right at our entry or area that we're looking to get into this trade. Now, mind you, I, I, I saw this as well. I saw this area that I was looking for market to pretty much break above, come back down, retest where it broke out front, and then sell off. I'm not gonna cap. That's exactly what I thought market was gonna do. And this is why I had it drawn out this way. Because I seen the wick that happened. I was expecting the market to come back down and basically touch this trend line and then come back up to create a lower high, then sell off. Right? Market had other plans. It ended up creating a highway up here, a lower highway up here. But I want you guys to look to my left. I have this zone marked here. Can anybody tell me why I had this zone marked here? Before I seen any of this, right? I had two zones marked. I had this zone right here, and I had this zone. Can someone tell me why I marked those areas?
Fair
Only
value gap.
who said that?
Me.
Who was me? Say that one more time.
Ahmed.
Say no more.
Ahmed. For fair value gap.
Perfect. Did everybody hear that? Everybody hear what he said?
No.
Okay. He said fair value
No,
gaps.
not if you
All right. And what the reason why I use fair value gaps as confluence is because if it lines up with my 50% or my 61.8, those are the areas that I know that I should be taking this entry off of because that's an extra confluence that I have. We already know that we want to enter at the 50 or the 61.8. If this was my first fair value gap, someone tell me if I should have been looking to enter here. Yes or no? Based off of my Fibonacci retracement. Is this where I need to be entering the market?
No.
Okay. Now, seeing this, you would have thought, you know what I'm saying? Seeing this, you would have thought it was okay to enter because, for one, this market closed right here on Friday. Market open like this on Sunday. So we really wouldn't have known that market was going to do that. So entering there wouldn't have been bad unless you understood where your Fibonacci retracement goes and it should went from this high to this low. So once it came back, or once one only thing that you should be looking for is the market come to the 50 or 61.8. Anything before that is irrelevant, and best believe that that's probably going to get swept. Right. So this was a nice fair value gap. Was it at our 50 or 61.8? Absolutely not. So we don't use that one. Now, when we come up again, we have another fair value gap that's literally sitting in between our 50 and 61.8. Now, y'all see how perfect market came to the 61.8 and then started going down. Y'all see that? That's cool and all. That's cool and all. But that's not enough for me to feel comfortable enough to say, oh, market is going to continue to go down from here. If you got this entry here, you're a bad mother sucker. You're a bad mother sucker if you enter here. But I mean, there was not too much of a confluence for you to say, oh, I'm gonna enter here and just place my stop loss here. The only thing that you basically could have done was just basically going off of the fair value gap and then going off of the 61.8. But also what I was looking for, and I have it here, guys, I said I want market to take out a high, come down, give a lower high, and then sell off. Y'all see what happened right here? I drew it out. It didn't go to exactly where I want. It didn't hit the exact spot, but this is me saying this is what I want the market to do before I take the sell. Guys, the market literally did it. When market open, why did this pop up? When market open on Sunday, market open like this, market came up, came down. Oh, wait, where retraced? I'm trying to see, you know, I'm about blind, but came down and literally came right back up and then sold off. That is exactly what I had already drew. See, I didn't expect market to come all the way up here when market opened on Sunday. But I knew what in order for me to get into this sale, I needed to see market take out a high, retrace back down, retrace back up, create a lower high so I can take the sale. Because now I feel more comfortable getting in the trade from here and placing my stop loss above here. Or in this case, we had the same instance happen again. Market literally created this move, came down, and this is why I would say this, and this is the actual move that confirms it all for you. This right here. Let's take all this stuff off. This kind of confirms it all for you. You have that retracement trend line. You have the break of the retracement trend line. Guys, check this out right here. Market literally breaks this lower high right here. This is the, I'm in a higher low right here. Breaks this higher low. As you can see, breaks the higher low, retraces, tests this fair value gap, and you can enter the market. It's literally like all you really have to do when it comes to this liquidity stuff is wait for the retracement trend line to be broken. Once the retracement trend line is broken, then that lets you know that the people like if you're buying or if you're selling, the market is now moving in your direction. Because just buying off of here or I mean selling off of here, you don't know if the market's gonna come down. But once market actually breaks the retracement trend line and breaks previous structure, then you have the move that you're looking for. You have this high, this low, this lower high, take the sell down. Take profit already been hit. Literally. Take profit already been hit. Looking for TP2 next. Right? So any questions about that in particular? Any questions about that in particular? Because I'm gonna give you another live. I'm gonna find something that we can actually mark up tonight and show y'all that same example. But any questions? Because this is where gold is now, by the way.
I'm good, Zay.
Okay. Did it make sense? Did I confuse anyone? Let me know.
It made sense.
Okay. All right. So to make it all make sense, guys, your main thing is to because you can trade on any time frame, right? But your overall thing is you want to look at the daily and see what the daily is doing and see which direction the market is moving in on the daily, right? Because if you look at the daily and you see the daily is bearish, then any time frame that you're looking at your focus should be, let's see if I can find sales on this time frame since the overall trend is going down. If the overall trend is going down, I need to be still looking for sales. Regardless if the market is looking bullish right now, that's cool and all, but I don't know how much longer it's going to go bullish before it starts selling off. Because you can't beat the overall trend no matter what. Like even people was like, oh, I'm gonna buy right here because market came here and I think it's gonna come up and create a new high. Guess what? You got cooked because you if you didn't close here because you were so busy focusing on the actual buys, but you ain't even looked at how gold been selling since the beginning of freaking look at this market. Look at this thing is very bearish. So looking for buys here, you cooking yourself. Think about it. You buying here, and look how deep this thing sold. You buying here, okay, cool. Look how deep this thing sold. You buying here, look, sold again. You bought here, guess what? Sold again. So like, if you look for areas of where market is going at its highest points, you need to be looking for sales. Buys on gold or a no go. If I catch any of y'all buying gold and y'all drop it in the chat, I'm gonna delete your message. I'm kidding. I'm kidding. But guys, make sure that you're actually trading with the overall trend is what I'm getting at.
Yo, Zay, that sounds something like I would do.
It's like something you'll do to me, bro. Zay, bro, come on, bro. What you doing, bro? Trend is bearish, bro. Why you buying? And then next thing you know, a few hours later, I'll send a message like, yeah, bro, I got cooked, bro. Or yeah, bro, I got stopped out at break even, bro. Like, bro, if you would have just traded with the trend from the jump, you wouldn't have to worry about that. And it's less stressful. I'm not gonna lie, it's less stressful, guys. I took a trade today, US 30 trade today. I made profit on the trade. Was I happy about the trade? Hell no. Because when I looked at the market, I'm like, this wasn't ready. I didn't follow my confluences here. I did not follow my confluences here. I didn't wait for the market to break the retracement trend. I entered the trade early only because of what news was what the news was. I literally traded off of news. I didn't trade the actual system because I did not wait for my last confluence. And if I didn't close the trade at the time that I closed it, I would have been cooked. I would have been cooked. So that just goes to show, like, if you literally just follow the system and follow and wait, even wait. I know I can't remember who it was, but when Mino called Euro AUD, I didn't get a chance to get into it when he called it. So I set a limit order and someone messaged me like, bro, my trade didn't activate. What do I do? And I'm like, okay. Instead of us jumping in it now because the market is like 20 pips from where he called it, let's just keep the limit order and let the trade come to us. I'll say probably like a couple hours later, he messaged me like, bro, it just activated. And now he, you know what I'm saying? We're in profit. So let's say if we would have literally entered that trade at the time, we probably been in drawdown, crazy drawdown. But it's the simple fact of just being patient enough to let the trade come to you. That's what you should always do when you're looking to enter in the market. Don't just jump in because you're like, oh snap, it came here. Let me sell it. Well, who's gonna? I mean, what confirmation do you have to say this retracement trend is done? None. None truly. You're kind of just going based off of, okay, I have this area in my 61A, I have this fair value gap. Okay, that's cool. You can take the trade. But confirmation wise, let's as soon as you got the confirmation, guys, look what happened. Like you got in this trade, market played around with you a little bit, but as soon as the confirmation happened, what happened? Instant profit. Instant profit. And I'm talking about drop down. So those are the type of trades that you want to be in. You don't want to be in those trades where market you get in, market consolidating, consolidating, consolidating. Then you wait for that pullback to happen. You enter that trade and boom, you in profit. Now you go break even. Guess what? Another little retracement and boom, you in crazy profit. Right? So those are the type of trades you want to be in. You don't want to be in trades that are stalling. And the reason why it's stalling because now they're just trying to collect orders and they're trying to decide which direction they're gonna go in. That's when you know that you're in a trade that you probably shouldn't be. When market is not moving instantly, you're probably in a trade that you shouldn't be in at that moment. You probably entered the trade too early. So now the market is just trying to figure out, okay, who we taking out first before we go into the direction we're supposed to go in. So prime example, just make sure liquidity has been taken out first before, or you're going to be that liquidity. All right. So enough about gold. All right. Enough about gold. Let me get something else to focus on. I know Hans was talking a lot about certain pairs due to the news releases and everything that's happening this week. I want a currency pair that y'all might be looking at, a currency pair that y'all might want to trade.
GJ.
GJ, okay. Let's look at GBP JPY. GBP, what are you looking at on GBP JPY to be exact?
Let me pull it up.
You said going up?
Hang on, I'm just pulling up the chart. On my
Okay.
end, so.
Okay, cool.
Before
That's
I
cool.
answer that, though, there are some big news releases this week, though, for GJ
Okay.
on
Let's
like the
see.
31st, according to my FX book.
Okay. What type of trend
Um,
would you say GJ is in?
on the daily, it looks bullish, but it's
Okay.
been heavily retracing.
Okay.
It's been heavily retracing since what day is this? The 15th of July.
Okay. Let's mark it up right quick.
On the 4 hour, it is still bullish, but retracing as well. But
Hmm.
it's reaching I believe correct me if I'm wrong, fair value gap. It's reaching a zone where it might go back up. But
Okay.
the the releases from the Bank of England and Bank of Japan are gonna be impactful. And then on the 1 hour, it's now becoming bearish.
Okay. Yeah, that 1 hour. Definitely still bearish at the moment. I think like overall I do see bullish GJ bullish. Um I see this thing need a crazy retracement. Let's look at the daily. Let's look at the daily because this right here is a small little all right, so just to mark it up just to see what's actually going on with it. Um now what I'm about to go over, guys, this is what you genuinely want to focus in on. This is how you're if you're using the system, this is how you're going to mark up your charts, mark up your pairs. These are the steps that you want to follow. You know what I'm saying? So let's go ahead and get straight to it. If we got any questions, if you have any questions while I'm going over this, please stop me in my tracks. Do not let me get to the end if you don't understand something that I said, okay? Can I get a one in the chat box if everybody understand? Do not let me go through this whole pair and you don't know what I'm talking about, what I spoke on, what I said. I want you guys to stop me in my tracks and ask a question if you need to. All right. If you ain't pay attention to nothing that I talked about today or tonight, this is the time to pay attention. All right. So starting from where current market is. Current market is literally sitting right here on this candle right here. So from there, what you want to do is you want to have four lines on your chart from the daily time frame. And the reason why I say four lines, and those are going to be horizontal lines, um, you're basically going to figure out where your previous highs and lows are. All right. So if I am sitting here, I have to understand that, okay, my biggest question is how did I get where I am now? Okay. And the way that you figure that out is you move your cursor to the left because these are the only candlesticks that you can see. You don't have any candlesticks to the right. So you're going to look to the left, right? So that's the first thing you want to do. Always look to the left. What time is it? Let me check my time. Okay. Got about 10 minutes. All right. So look to the left, right? So if I go to the left, I understand that this right here was my most recent high. All right. And then if I scroll down to the bottom, I say, okay, this was my most recent low. Everybody understand that part? Everybody good? We good?
Yes, I'm good.
Okay. Perfect. So according to this, this is my current market, most recent high, most recent low. Now I'm also going to look here. What was my from here? Was my, I guess, most recent high or I guess highest point or whatever you want to look at. Basically, is this right here, right? This right here was the high before creating this high. Now, what was the low before creating this low? Pretty much down in this area right here. Could have used that one. I probably would use this to be exact, only because I see multiple um touches here compared to here. So let's just bring this down just a little bit, right? Remember, we placed these here. So let's just bring this down just a little bit. All right, that's better. All right. So I have my four lines on my chart. Let's remove this. I don't need that. So now I just have my four lines. I'm just using these to understand like where market is currently at and what were the moves previously. So we can see that this was the high, this was a low, this was a high, and this was a low. So basically low, high, higher, low, nothing came higher, right? And then you had this higher low and then this higher high. All right. So now what I'm going to do is These lines are just to see what's going on. Honestly, truly, if I'm looking at this, I'm gonna say, okay, where was my I'm going with this. Okay. So based off of this, can you guys tell me what type of trend are we currently in? Just
Bullish.
based bullish
Well,
trend. Okay. Okay, perfect. So again, this is my current market. This is my previous high. This is my previous low. So what I'm gonna do for that is only these 2 points are what I'm gonna focus on at the moment. And I'm literally going to draw my Fibonacci retracement from this previous low to this current high. All right. Correct me if I'm wrong. Anything that you guys see that I'm doing wrong, let me know. Any questions that you have from this point, let me know. Any questions?
No.
Okay. So I'm gonna move this down.
I do have a question. I do have a
Yes.
question. So, I see you did all the markup.
Mhm.
Um, why are we doing all this markup on the 4 hour time on the daily time frame instead of doing it on the 4 hour time frame?
Okay. Because I'm doing a top-down analysis. So I'm going from the highest time frame. Then
Highest. Okay.
yeah. So I need
Okay.
to see
Sounds good.
what the daily is doing because I'm focusing on the daily trend. If I follow the daily trend, I should be good as golden.
Yeah.
All right. So we know, right? We know that on the daily, right? This was the low, this was the high, right? What's the next thing we should expect the market to give us if the market is actually going bullish? We already got a new high, right? What's the next thing we should see the market give us?
A higher low.
Higher low. All right. So if we were looking for a higher low, what would be the area or what would be the area we should expect this higher low to be at?
between that Fibonacci retracement, that 61 and that
Just right here?
50.
I would.
Yeah. As well as there's an additional confluence here. The where you look to the left, there's that previous high. So I'm thinking that's a high probability area right here. Yeah.
Right here?
Yeah.
Okay. Anybody
Mhm.
else? Anybody else?
Did you ask that again?
As what again? Where would the higher low be?
Oh yeah, no, never
For
mind.
me, I
It's
would say
there.
All right. So what I just drew, guys, was the trend line on the daily time frame. Right. And the reason why I drew this trend line is because I want to see where, where the market is actually trending up. From here, you have that low, high, higher low, higher high. Right. So from this area, right, we should be expecting market to create another higher low because we just previously created a new high from these highs. All right. So from there, right, if that's the case, we're expecting market to create us a higher low. That means we are now going to the next time frame to see what the market is currently doing. All right. So if we know that we're looking for a higher low to happen here, that means the market has to do what, guys?
Retrace.
Retrace. So if we're looking for market to retrace, that means the market has to sell off. Now, this is what I mean by intraday trading and things of that nature. Intraday trader is probably looking for sales on this. They're looking for sales to get to a day trader or a swing trader point of interest. Does that make sense?
Yeah.
Okay. So let's say a market did decide to come to this trend line again, right? This is probably where the people who are looking to swing trade are looking to swing it to the next high, right? Either equal high or a higher high. Pretty much what a swing trader is looking for. Now, anyone that's probably day trading or who drew that right there? Okay, I see what you're drawing. I see what you're drawing already. All right. So anyone that's looking to possibly intraday trade or whatnot, they may be seeing something a little bit more differently, and which will make sense because we will probably still be waiting for the market to come to our area of interest. Okay. So from there, right, we remember if we're looking for market to come down to here to find our entry, then we cannot forget to draw that retracement trend line. All right. So when I draw this retracement trend line, I'm going to draw it from here, and I need it to touch my areas where I'm getting these lower highs. Remember, the retracement trend line is going to give us the opposite of what we're looking for. So it's going to give us lower highs and lower lows. All right. So from there, right, me personally, if I say this thing is bullish, even though this thing is retracing or trending down, I'm probably not even going to look for sales because I don't know if market will continue to retrace all the way down here. Let's say the market decide to stop right in this area and go right back up, right? So if I'm looking to take this trade or if I'm looking to catch some buys, right, I will be looking for market to break, right, a lower high for me to enter a buy, right? So in that case, we have this high, this low, this lower high, right? That is where I'll be looking to catch the buys off of. For now, the market is trending downward, right? So if I'm looking at GJ or looking to trade anything with GJ right now for buy wise is not ready, right? It's not ready at all. So all I'm gonna do from there is really, I mean, honestly, truly, just wait for the retracement. Not even gonna lie to you, the best thing to do is wait for the retracement, unless you are someone who's gonna target these sales. Now, again, not my personal preference, but I mean, overall, I'm just trying to zoom in so you guys can see. But overall, it's definitely bearish due to the retracement, right? And if you were potentially looking for a possible sale opportunity, I'm not gonna say it's wrong, but I would definitely say you're just waiting on the retracement to happen. So don't look to be holding this sale all the way down to here, if that makes sense. Don't be looking to go all the way down here because you're in an uptrend, right? So you shouldn't be expecting the market to break the daily low if it's trending up. You should be expecting the market to give you another higher low, something higher than the previous low to continue up. But if you're looking for a sale opportunity with GJ in particular, right, what you want to focus in on is, hey, Brian, if you can click on these lines that you drew these and remove them, if you can. All right, hold on. So based off of this, right, you're getting this, what the market is giving us. So all I'm doing right now is just following what the market is giving. That's all I can do at the moment. All right, boom. So from there, right, if I was looking for a sale opportunity to get into a sale or something of that nature, which I probably would prefer not to, only because I'm just looking for that retracement to be done so I can look for a buy. This is typically like an intraday type of style of trading. Understand that you are following this retracement trend line. Um, I don't really recommend it, honestly, but this will be kind of like what you will kind of be looking into. You'll be looking into market too, and this has to make sense. Like you can't just get in just because. But this is how you can literally still capitalize off of the market moving in this direction. Because right now it is going bearish for sure. I don't know how long it will continue bearish, but let's say if you were looking to take the sales on GJ, um, from this high, this low, you see this lower high. I want you guys to see that market has not came to your area of interest. So you wouldn't be able to technically take that sale yet. But even if it does, look to your left. And kind of what you want to see is understand that market kind of has to give you, you know what I'm saying, this type of movement, right? And even if it does that, guys, I probably won't be messing with that. I would need to at least see it come back below this trend line, right? That's just me personally. And let's say maybe I drew the trend line wrong. You know what I'm saying? Maybe I did. So if that's the case, let's just move it to where you actually have your last lower high or whatever. But based off of this, right? This lower high, these lower lows, what you basically want to see is market sweep this lower high, right? You want to see a nice sweep of that lower high. And let's say you want to basically see something like this, right? Kind of want to see market kind of give you a nice sweep above here. You want to see it touch your area of interest. And then I also see this right here to where I see I could enter here, but I'm also seeing my little highlighted fair value gaps in this area too, right? So I'm seeing highlighted areas in this fair value gap. I'm not even gonna cap. I wouldn't even be looking to even enter directly right here at the 61.8. If I'm looking to take this trade or get into this, I probably be looking to enter like somewhere up in here, somewhere up in this area. But either way, what you have to wait for before you even getting into that trade is basically you want to see something like this, right? Let's say market did one of these moves. Market created this low, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. What you want to see is market create the opposite structure, break below, right? Let's say it broke below. I would love to see it break below this, back below this trend, but that's a stretch. Once they break above a trend, I'll be skeptical about the sales anyways. But let's say this was to happen, right? You got a low, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. Market then creates a lower low, right? Lower than the previous higher low. All you want to see basically now is a retracement or a pullback. And then I'm pretty sure you're going to see like some type of on the lower time frames fair value gap. So something that confirms your entry up in this area. And then you can look to be taking your sales down to this area. All right. Now, this will be not be this won't be an A-type setup to me. For one, this is a retracement. For two, it I mean it's a retracement, it's going against the overall trend, right? So that doesn't make it an A+ setup for me. This would not be something I would call, but I'm not saying that this couldn't be a potential setup because it could be a trade setup. It could be right. Um, but in my opinion, uh, it's best for you to go with the trend, but as long as you use your confluences, um, regardless of which direction you're trading in, um, you still can find profitable trades or legit trades. But I would just highly recommend just sticking to whatever direction the overall trend is in. But I would definitely say with this in particular, you have a long way down if we're looking for a higher low, a very long way down. Let's say we have about market is currently here. So you have almost about between ain't too bad, like 100 and something pips, or like 100 to 200 something pips before actually getting all the way down there. So I mean, hey, give or take, you know what I'm saying? Got a good amount. It's only 100 or something. I feel like that's more, but maybe I'm wrong. Yeah, about 200
Awesome.
something.
Thank you, bro.
Yeah. So I would say that again, like I said, you got a long way down for market to retrace and give you a higher low, but you know, I will always definitely say I recommend you going with the trend, like the overall trend, not necessarily a retracement trend, but I mean, think about it. If you were looking to take this trade and end this trade here, you're not even getting close to down here. So that's kind of like a quick intraday type of trade. And your risk, your risk will be very small. Your reward will definitely need to be at least three times as much as the risk. But if I had to give you, anyone advice, I would just say find a pair that's actually going with the overall trend, or a pair that's already came to the daily high or daily low that you're looking for. That would probably be your best bet if you're looking to take a trade, right? So if GJ was already right here, then I would love to be looking to get into this trade, right? Because then I'll be looking for some type of buying opportunity and it'll probably do some shit like this, right? And it can do that all day long. But the moment that it decides to, you know, sorry, hold on. The moment that it decides to correct itself and skip all this fugazi that it's doing, right? The moment that it decided to hit me with one of these, boom, best believe I'm gonna look for a retracement and I'm gonna take the trade going in the opposite direction, right? That's all I'll be looking for on that, right? So it can do all this retracing down all at once, but until it breaks the previous structure, I'm gonna look for a nice little, of course, you know what I'm saying? It's gonna be a break of the retracement trend line. Of course, I'm gonna see a low and then a new high. I'm looking for some type of fair value gap or something that can give me a confirmation to enter at this area. You know what I'm saying? I could easily throw another 60, I mean, fib up here, make sure it's follow my 61.8. And then, you know what I'm saying? I'm looking to take off. I'm looking to execute, right? Of course, I'm gonna go past this area, right? But I'm gonna definitely place entry here, stop loss below here, and then ride it all the way up to TP1 to TP2. You know what I'm saying? So that's what I would prefer, but like I said, I'm not gonna disagree with this specific sale opportunity because we haven't even came here, but I'll prefer to go with the overall trend and trade in a retracement, in my opinion. And I'm only speaking that from experience. I've been cooked multiple times with retracement trading, and I'm good. And so I definitely, I mean, like I said, it's a probability that this trade could potentially retrace and drop down, but I'm just not fond of going against the overall trend. I've been cooked multiple times, and I prefer to just wait. So I hope that kind of helped, though. But yeah, that's basically what you'll be looking for, honestly, truly. You know what I'm saying? Wait for that thing to retrace. Because I mean, you already got a high, and now you created a new low. So you know, if you create a new low, you should be looking for a new lower high. So as long as market creating these up, you know what I'm saying? Whoop-de-woos, these higher lows. Wait for that break below the higher low. Create you a new lower low. Look for market give you a lower high. Take the sell down. Place your stop loss above here. Take the sell. Zero, -27. Good as golden. That's how I would look at it. Quick little trade. Quick little trade.
I did enter a sell there,
You into
but
this?
about yeah, a day trade last week Thursday, but I
Hmm.
had it over the weekend, and my stop loss was a little tight, and I got kicked out due to
Yeah,
the
man.
large swap,
Yeah,
and
man. It
then it just
happens.
went and it just went all the way down. Yeah,
Yeah, it probably kicked you out and then went right in your direction, huh?
right.
Yeah, and that's why I despise like that's why I ain't gonna say I despise it, but I'm starting to, what I'm saying, just not deal excuse me, not deal with the retracement trades because they just kick you out and then literally go in your direction. And it's like it's nothing you really can do about it. You know what I'm saying?
Yeah,
But I would say anytime you enter a trade, just make sure you got that confirmation. You get that either in a downtrend, you get a break of a lower low. You know what I'm saying? I mean, a break of the retracement higher low to get create a lower low and then wait for it to retrace back up to create a lower high. That gives you what you need to get into the trade, and that gives you a better um confidence and confluence on entering it. Don't just enter it just because. Make sure it makes sense when you enter. You know what I'm saying? Because someone's selling here, that would be crazy because you're selling at a low point, right? So what you want to do is wait for market to come at least to a highest point or a high point to sell off of. These are areas that you want to buy off, but I'm not recommending y'all just buy here. You know what I'm saying? Because kind of still going against this trend too. So just make sure it makes sense when you enter any trades and make sure it's at your 50 or 61.8 regardless. Regardless. Let me keep that. I want to see how that plays out.
Amazing.
Yes.
Yeah, so talking about this trade, I'm currently in need for a buy, and it's almost at my entry price right now.
Hmm.
Yeah, so somewhere around that price, that's where it is right now for a possible buy. Because once
Hmm.
I did all the checks, I saw that's a good trade to take. So like I'm seeing the possible sells right now,
Hmm.
but obviously I'm in need for a buy right now.
Okay, let me look at another chart because I could be looking like this is like
And if you look at the 4 hour charts, just try and look at the 4 hour charts.
okay. Because I can literally go off of, let's say if I did this right here, I can literally say, okay, let's focus just on this area right here. Um, let's say if I say let's focus on this area right here. So let's focus on this low and this high. You know what I'm saying? And then we place the fib from this low to this high. You know, that can confirm easily where I need to be entering this trade, right? It can easily give me, oh, I'm thinking higher low here. And that could be right too. Because that is the most recent low or the last low and then the last high overall, like the main highs and lows, because these are everything right here is internal. Right. So from this move to this move, you're looking for the retracement to happen. But even if you were looking for a buy, right? Let's go to the 1 hour now. Oh, we are on the 1 hour, sorry. Let's scale closer into what we're looking at, right? Let's look at it. So we're still in the retracement phase. My thing is, right? My thing is this. Um, where am I looking at? Horizontal line. No, not horizontal line. Um, right. All right. So looking at it like this, man. My thing is this right here. Um, lower high, lower high, right? We still kind of been trading low. I haven't really seen anything higher or any higher highs be created. So I would say this could be potentially a but it could be a potential buy, but does it confirm your buys? Like, let's go to a 30-minute. Even at a 30-minute time frame, we technically still don't have anything that created a higher high. You know what I'm saying? We don't, this is a lower high, right? Market came down, created another lower high, market came down. Let's go to a 15-minute. Even at the 15-minute, we still don't have anything that's confirming um a higher than any highs, anything that's breaking above these lower highs. Let's place one so we can say this is a lower high, this is a lower high, this is a lower high, and then market came here, but look what happened. It came here, went right back down. Came here, went right back down. So we're not tr any breaking any true lower highs just yet. So that's something that I would be cautious on. Even though it's at the 61.8, that's cool. But my thing would be this: I need to see market break at least above here. Because if we can break here, then I feel a lot more comfortable about, you know what I'm saying, potentially getting that breakout, that nice retracement, and then looking for the entry and placing stop loss below here.
Um, when you're
All right.
looking at time frame right there, don't you see there that is touching that area repeatedly and bouncing off that area? So potentially that's a resistance area technically.
This right here.
Yeah,
Okay, so technically that's the opposite. It would be a support. But
support. Sorry, yeah, support. My bad.
I do want you to also be mindful that to a retail trader, that makes so much sense to look to buy off of there, right? And this could literally be a accumulation phase. This could literally be the market accumulating orders, making people, you know what I'm saying, get in here for the buys, take these buys, and then push up a little bit and then dump down and sweep everybody out the trade. That could be a potential too. So I don't want you to get caught up in, okay, I see multiple touches at the support, because if we look to the left, we can see that we also have resistance. We also had this as resistance and support. My main thing that I want you guys to really focus in on is that if this is going to continue pushing up, all we need to see is a break of a lower high. Entering here, what is nice, but it doesn't confirm, you know what I'm saying, that market is going to continue going in your direction. What will give you more probability is a break of a lower high, because then you know that structure has now shifted. Because market can literally push up a little bit and then come back low. You know what I'm saying? It could potentially do this right here. And then after it does that, then it can shoot up and break a lower high. You're like, damn, I should have just waited for the lower high to be broken, because then it'll come back, retrace where it came from. And then you should feel more comfortable about placing your stop loss below the area, entering at the 61.8 and getting in.
So
That's kind of what I want you guys to focus in on when you're entering.
so what would you say? I mean, how much times technically can a pair touch the support area, or even say resistant area first for you to say, well, that's a good support area, and then, is it 3 times, 2 times, what? And what time frame would you say is more solid to determine that support or resistance?
So I would say your 4 hour, your higher time frames, like anything 1 hour and under, are entry time frames. These are time frames that you wanted to be looking for entries on. In my opinion, because I can easily say you can look at a 1 hour support and the shit won't even hold. You know what I'm saying? It'll literally go break straight through it, and you're like, dang, I thought it was gonna hold at this support, and then it literally goes through it. And then you go look at the 4 hour and you look at how nothing, it was not really nothing solid. Like, even looking at it on the 4 hour right here. Um, this could potentially, I mean, honestly, truly, let's look at it from this point of view. So if you look to enter the buy here, where's your stop loss? You can put it here, right? We would say, oh, place stop loss right there. But that right there, if you're looking from this low to this high and then you're expecting this to be a higher low, you have to wait for that confirmation and confluence. Because if you're entering here, then your stop loss has to be below here. You have to place your, if you're looking to enter here, you need to look to the left and see where do you place your stop loss below the previous low. So let's say if this was your type of trade, or the trade that you were looking at, would this trade make sense for you to take? In my opinion, what does that make sense for you to take if you were going to the negative 27%? That's how, because that's how that trade would have to be. You're entering here, This hasn't been confirmed as a higher low yet, so your stop loss will have to go here. So if you look at it, that's a 1 to 2 risk to reward. Now that ain't really bad, but I prefer a 1 to 3, nothing less than that. But that's something that I would possibly ask myself. Excuse me, has this been confirmed as a higher low yet? Because it do look like we kind of swept. So you see how this was strong support right here? So many touches. I can't, so that's why I can't really say how many touches you need on the support to confirm if you should literally look to enter. Because look at all this support, 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 support. This is 1, 2, 3, 4, 5, so many touches here, and then it broke through it. See what I'm saying? And then retrace where it broke out from, and then went right back down. So it could potentially continue going down, or it can continue, or it can hold from here. But in order for me to confirm if it's going to hold, I need to see a break of a lower high first. If I can get a break of a lower high, then we could talk about entering this trade, in my opinion. That's just my conformance that I need to see, because that confirms to me that the retracement trend is now, you know what I'm saying, finishing up, or the bulls, the buyers have now taken over the market. Right now, the sellers are still in control, in my opinion, because we haven't broken any structure yet. So we can have so many touches at a support level, but that doesn't mean that market is going to hold that level, right? And that's why I say when you draw that retracement trend line, that is what's going to help you determine if you should be getting in this trade now. Because remember, here, if market wanted to continue going up, market would have never broke below here. Market would have continued to respect this area and continue pushing up off of it. But what did it do? Create this low, lower high, higher low, higher high, whatever this would be. I guess equal low, equal high, and then we started going right back below it. Right? So market should at least respect this if it wanted to continue going up from here. So my biggest thing was just wait for. Right now, we got this little retracement trend going on, but you want to see a break of a lower high, and then once you see that, then you can determine if this is a good area to stay in. Because once it breaks here, then I will confirm this is a higher low. And if you know what I'm saying, and if we lose it, we just lose it. You know what I'm saying? It really ain't too much you can do about taking a loss in the market. You just got to be okay with what happens. But from here, if we get a breakout right here, I will look for a retracement, and then I'll look for to take the buys to here or to here, and then I'll feel comfortable placing my stop loss. Um, Placing my stop loss below here, somewhere below here, just to give it a little room. That looks better to me. You know what I'm saying? But I need to see a break of a lower high first. I would really love to see a break above these, but that's what I'll be looking for. Break of a lower high. Ain't gonna lie, I would want to see it break at least above here and give me a nice pullback into the zone and then take it up. So technically speaking, probably ain't looking to enter like someone like that. But yeah, I mean, I don't want to really confuse y'all, but I would say the easiest way to get in the market is place your fib, knowing where you're looking to get into. Because if you got to go with what makes sense to you. If you're looking at the chart and you're saying, "Well, Zay, I see that you said something about the sale and everything," but I'm looking at it from this point of view. And just because you're looking at this point of view, don't mean you're wrong. Because at the end of the day, market has literally, you know what I'm saying, been giving you higher lows from here. So what you could be seeing could be completely right, right? It's been giving you higher lows. So who's going to say market is going to come always start dropping down here? I don't know that. I'm just giving you what I'm seeing or what I'm thinking the market is going to do. I literally just went from the daily time frame and I said, oh, from this low to this high, we should see a retracement. But who says market is not going to come up here before giving me that retracement that I was looking for? You see what I'm saying? So I can't really just say, oh, you're wrong, I'm right, or I'm wrong, you're right. You know what I'm saying? Like I think everybody sees the market differently in a way, and you have to trade what makes the most sense to you and go with that and be comfortable going with that. Don't let anyone change your judgment about what you're seeing because you may be right. You see what I'm saying? So, but also just don't be, what's the word I'm looking for? Don't be naive to market structure. That's all I'm saying. Don't be naive to, oh, we haven't got a break of the retracement trend yet, or oh, the market is still going bearish. So you just enter, you know what I'm saying? Like, just don't be naive. But everybody has a different, you know what I'm saying? You see the market different. So I don't want what I'm saying to change your thought process of what you're seeing in the market because
Mr.
you
Zay,
could you could be right. Yes, sir.
I love it.
What's going on, my boy?
I love it, man.
I appreciate it, brother.
You know how to tap in real quick.
Yes, sir. You got to, bro. Got to. But that's kind of how I want you guys to really see it. Like, don't if you see something in the market and you marked up your chart a certain way and it makes sense to you, don't let someone change your decision about what you're seeing because you might be seeing it for a reason. They might be looking to take a trade that's gonna like they're gonna be holding for a while, or you might be in a trade where you're not even looking to hold it for a couple of days. You see what I'm saying? So, um, definitely go with your best judgment. And like I said, I don't see anything wrong with treating it like this. But as y'all can see, every time the market creates a low, right? Let's say from this low to this new high, we ain't never get a full retracement from this low to this high. You see what I'm saying? Like from this low to this new high, we ain't get a full retracement. From this low to this high, we ain't get a full retracement. So my like I said, go with what you seeing, make sure it makes sense, and use every confluence, and be okay with the outcome. All right. I hope that helps.
Hey, I got a statement or question. Um,
Yes.
so on the daily, we can use the Fibonacci for retracement, right?
hmm
Can we leave that on and then go on the 4 hour and do a fib retracement too, and where it overlaps technically in the 61 50% area, and then that will be like a more high probability area where it would land technically.
And make sure I'm
Um,
understanding you properly. You said draw like having a fib on a daily time frame
yes,
and then going to the 4 hour
yeah,
and then also placing the fib on the 4 hour.
and where it overlaps.
So are you talking about something like so let's say
Yes,
we did this right here and then we go to the 4 hour and then where would you place your fib now?
from the last lower low, and then from the daily, you do this same thing to the I mean the last higher low to the higher high, and then do the same thing for both the daily and the 4 hour.
Okay. So from this right here, this will probably be your 4 hour. If I go to the daily gonna look something like this because you're going from the daily low to the daily high. And
Yeah,
the last daily low would be, in my opinion, the last daily low that market created was literally right here. This was the last low. And then this is the high right here. So, oh, that's a weekly. My fault, y'all. That's the weekly. Hold on. Let me go back to the daily. I mean, that's basically, that is the daily right here. Hold on. Sorry. So daily wise, from this low to this high, that's the daily. four
right.
hour wise, if you're going off the last 4 hour low, is that what you're saying? The last
Yes,
4 hour
yes.
low? So right here,
I guess so. Yeah.
because that would be the 4 hour low and the 4 hour high right here.
Oh, it doesn't intersect any at all. Okay.
So I would say, let's say this right here though. Check this out right here. So let's say if you were looking more so from this high to this low, right? I've seen at times where you can kind of find the intersecting to where I had my retracement fib going from the high to the low, and then my negative 27 was at my 61.8. Now that kind of confirmed it for me to say, okay, market is literally going to come to this area potentially. And then once it hits me at my, area of interest on my buy, this is where that sale should stop at. Now I've done that before, if that's what you're kind of asking.
Yeah, yeah, yeah.
But yeah, and like I said, I personally just think with this pair right here, like we haven't really got a deep retracement yet. So I can say that I could potentially see market coming here off of the daily, like long term. But you know, for someone who's looking to trade smaller type of trades, this thing is bearish. So I'll probably be looking more so on the sell side until we break a lower high. That's just my opinion though. And that could be wrong, but that's how I'm kind of looking at it. But from like I said, from what you're saying and from what you see, this initially is the last low that the market created, or the most recent low, and then the most recent high. And then from there, sorry, from
Um,
there, that's kind of where you at with it too. What's up, Mina? What you seeing, brother?
yeah. Was that, would you ask you that question?
Say it again.
Was it OG who asked you to mark up GJ? Was it him?
I can't remember who asked me
Yes,
to
it was
mark it
him.
up.
It was him.
Okay. Yeah.
So I 100% agree with Zay because if you do look at the daily, he hasn't created a higher low in a long time, right? But at the same time, like Zay said, since it is overall bullish, right? um, GJ can decide to shoot up at any given time, right? Because it is overall bullish, right? But if you're trying to intraday or day trade GJ right now, like as I said, as you can clearly see, it is giving you lower lows and lower highs. So the easiest way, I would say the most certain way to go about it, even though you're getting like a small 61% retracement level on the 4 and 1 hour time frame, like Zay just showed you guys, the best way to go about it, which is Zay, can you draw a trend line from the top all the way to where the market is currently at?
You mean like from here or here?
Yeah, from here, yeah. So the best way if you're looking for a buy is to draw that little trend. Yeah, just go down a little bit more to kind of get down in the middle as well. No, a bit more up. There you go,
Hold on.
right here. The best way to pretty much go about it, to be honest, right? Because you can technically say that the market gave you that small lower high and where it actually touched the small downtrend and it dumped a little bit. The best way to go about it is to wait for the market to actually break above that trend and that small market structure, that small lower high, right? And then wait for a pullback for it to create a higher low on top of that trend and on top of that previous lower high as well. Take it at the higher low, right? And then place your stop loss below that low, and you should be good to go, to be honest, to ride it all the way up there. There we go. That's for me, I definitely take that setup. But you gotta
Yeah.
wait for that break up the trend and also that break up that small lower high as well, if that makes sense.
Yeah. And that's why I said even what you're looking at right now, it could, like I said, it could be potentially a buy. The only thing that you would need to see is the break of a lower high. That's it. Like it doesn't necessarily like it doesn't the market don't even have to go all the way down to where I said it would go. If market breaks a remember, if this thing is bullish, if market breaks a lower high, then you need to be looking for that higher high to be created after it breaks that lower high, then wait for the higher low to be created. Because then now you'll be entering the market at a higher low. Then you know you'll be looking to target the next higher high, which is way up here. You know, um, that's literally it. You know what I'm saying? Like market necessary, and I'll say that's how sometimes I even catch moves that I didn't even anticipate. I thought I was going to catch because I just draw the retracement trend line, and I could be expecting the market to come all the way down here. But who says the market has to do that, guys? You can easily see how market has been giving us crazy lows, highs, and then higher lows right here, and no type of retracement, but still go up right? We see that. So it's like if you literally can say, let's say for example, we were waiting. Let's delete all of this. I just want to show y'all something really quick. Let's say we were waiting for market from this low, right? From this low to this high, right? Let's say we waiting for market to give us this higher low. We waiting. You know what I'm saying? You can see that we never got it, right? But let's say if we draw that retracement trend line because we anticipating market to give us a break of the retracement trend line. Where I draw my shit at? Hold on. Okay. And we draw this retracement trend line. Look at it. All right, look at it. Market then it didn't come to our area, and this is like a day. This is actually an hour, but I'm sure this is like a daily low, daily high. But I just did it on the hour time frame. If I scale down to like the 30-minute, 15-minute, you guys can see how market literally breaks out of it, breaks out of the trend line. Hold on, let me zoom in. So right here, we ended up right here. So let's go here. We ended up breaking out, right? We ended up breaking out of here. So we have all these lower highs, lower highs, lower highs, lower highs. Market kind of broke out of here. And after that breakout, what did he do? Retrace, right? There's a little Fibonacci retracement. And as you guys can see, look at it. Lower high, lower low, pretty much a new high, higher low, came right to your area of interest. And look, boom, smashed through your take profit, right? It didn't even come down to this area. So this is why I say when you draw that retracement trend line, guys, you could potentially still capitalize off of a trade, right? Because then like market necessarily it doesn't necessarily have to come back to this area. This is literally what we're talking about on GJ right now. It does not have to come back to the area that I said I want to see market come to. If market breaks that retracement trend line and breaks the lower high and retraces, guys, guess what? Market's going to continue to go because it's overall bullish, right? So that's how you kind of want to approach it at the end of the day. And you got to remember, trading is all about risk management. If you know what I'm saying, if this kind of plays out that way, you're like, well, it kind of didn't come back to my 61.8, so I want to wait. And then guess what happened? You missed the move. That's okay too. But let's say if you do this, I'm gonna take this shot and see how the market plays out from here. And you go, all right, I'm gonna place my stop loss below the 78.6 or wherever you choose to place it. Let's say if you choose to place it here, right? And then you're looking to target your take profit. Well, it got to make sense. You got to have at least a 1 to 3. So that technically does not make sense. So what you would want to do is if you know that your entry has to be here, your targets are here, go ahead and move that stop loss up to where you get that 1 to 3. And there you go. Simple as that. You literally can take a trade just like that. You got a breakout, retracement, take it. Me personally, I would have been looking to take it from here anyways, because again, I feel like I can go any time frame and find a good setup. And if I look to the left, guys, you can easily see market created a nice fair value gap at your 61.8, 50%. So you could have easily caught a trade right there too. Right. And it's all about just understanding what the market is doing, understanding market structure. And you can easily capitalize off any trade, any time frame. All right. But like I said, if you know that the daily is bullish, just go with the bullish trade. Go with the bullish trade, but make sure it makes sense when you're entering it. And the only way to find out if it makes sense is if you break in previous structure, getting that retracement and taking the trade. Do not prematurely just get in because you just want to. Make sure it makes sense. All right. So that's all I got, man. That's all I got for tonight. What time is it? 10:30. 10:34. Man, we 30 something minutes already over. That's tough. All right. But anyways, any questions, guys? I know we've been in here for a long time. I'm gonna go ahead and start recording because I don't want this to be too long. But in 1 second. Make sure I